Hello, welcome back, guys, to my YouTube channel. This is my Fierce Forex for Beginners YouTube series. Now, I know in the last YouTube series I did for beginners, I actually said that was going to be the last installment in the series. However, I want to add one more module. Okay, there are about 11 modules, about 13 or 14 videos that cover the beginner series, but I want to add a 12th installment, and this is just going to be the part one of our 12th installment, where we're going to be talking about trading psychology. Now, this is a very crucial topic. In fact, I think based on everything that we've already discussed in the last 11 modules, this is actually what is going to separate you from the pack as a trader. Okay, so for beginners, if this is your first time, first of all, on this channel, thank you for being here. Secondly, if you guys have not yet gone through, if you're brand new to Forex, know literally nothing about trading, and you haven't yet gone through the 11 modules, please stop watching this video right now. It may make sense, but I don't want you to dive into it. I want you to first go to the beginning modules, go through each and every videos. They're anywhere between a couple of minutes to half an hour. I believe the longest video is an hour. So please just dedicate time to go through that, then come back to this video, okay? But either way, even if you're here, we can go through this, but then please, by all means, make sure you go through the entire videos. Once again, thank you for being here. So let's move on. So this is module 12, trading psychology. Now, what is trading psychology? Okay. Now, as the name suggests, it has to do with your mind, okay, and your mental state. So a quick definition, or a clearer definition, as you can see, is it's the mental state and emotions of a trader that determine the success or failure of a trade. Okay, so your state, your mental and emotional state as a trader is going to really determine whether you're going to be a good trader or you're going to be making losses in the market. Okay. And later on, I'll just share the statistics in Forex so that you can also understand the kind of industry you're venturing into, or you have decided to venture into. And this represents basically the psychology, it represents the aspect of a trader's behavior and characteristics that influence the actions they take when they're trading. Now, let me also give you guys an example of myself. And I know I spoke about this in the initial module 1, I may have touched on it, but I just want to tell you that my journey in the last 4 years as a Forex trader have been very interesting, with ups and downs. When I say ups and downs, it's been highs, where I've been very excited about this. We are looking like I'm making money. And then there's been lows where I've been capturing losses in the market, being very frustrated, thinking I know what I'm doing, and then, dialing it back, going backwards and thinking, oh my God, I actually still don't know enough. So that has been my journey, okay? And a lot of traders are going to go through, especially at the beginning, okay? A lot of people consider Forex to be a get-rich-quick scheme. So it's not a get-rich-quick scheme, okay? It's not easy. And this is me setting the perspective so that as you continue practicing what you've learned, you actually know what you're doing. And you actually have the right mindset. Forex is not easy, but it's simple. Okay. Now, what is going to make it even simpler is how you approach the market. You ensure that you are always calm and collected, cool, calm, and collected, right? The 3 C's. Now, as you can read here, it says the emotional component of a trader's decision-making process that determines the success or failure of a trade, okay, which I've already mentioned. And the specific emotions here are fear and greed. Now, I always say fear is actually the opposite of greed. Okay, sometimes, and I'm talking in the context of trading or being a trader, you find that fear sits on the complete opposite end of greed. Okay, either you're going to become a fearful trader, and by a fearful trader, basically, it means you're one of those traders who's going to not want to lose in the market. You're never going to want to make any losses. Like when you see losses, you're going to be depressed, you're going to be anxious, you're going to be angry sometimes, and so on, okay? And then there's the other aspect of greed, okay? whereby because you think Forex is a get rich quick scheme and it's an easy way to make quick money, okay, you're going to be wanting to make your money fast. I'll give you again using my example. When I got into this, and I've shared this before, when I talk about my journey in Forex, I was getting into this industry to learn when I was coming off of the back of a lot of financial stress, okay? And because of that, I was really in a hurry to learn this skill, to make money, to start paying off my debts, to get out of debt, and things like that, and just to show people that this thing was working. So I was getting out of the gate, right out of the gate, I was very, very greedy. I did not suffer fear initially. My biggest challenge, and when I talk about it in my paid classes or coaching program, rather, guys, I talk about greed in one of the initial classes, about the way that some of these fear and greed is one of the demons that a lot of traders fight with or struggle with. And as a beginner trader, you're going to deal with this. I need to set the record straight. You're going to deal with either fear or greed or both of them. You're either going to never want to lose money. So if you don't want to lose money, you'll always be fearful to get into the market, fearful to take a trade, fearful to take a position because you're holding on to this cash that you have. So one of the things I want to advise you guys in terms of this is right now, before you even go on a live account, you're going to have to practice on demo to build your confidence. I tell people, take 3 to 6 months on demo. Some people will be like, no, I want to start earlier and things. I'm like, no. From my experience and from what I've seen from my mentors before me who are doing pretty well, living a full-time income, making six figures in this industry, they will tell you take 3 to 6 months, sometimes even a year, just practicing on demo. Okay, but at least 3 months minimum, 6 months midterm, a year long term, then you can go on demo. Okay, if you're in a hurry, 3 6 months. Okay. Now, when you get on live, what happens in the demo account is it helps you to gain the confidence. But then when you go on live, it's a whole different ballgame. You know the skill, yes, you're a bit confident, but you haven't really traded live money. Okay. So the emotions involved in trading live money are really going to be very different from you trading a demo account. Please know that in advance. Okay. So if you find yourself sweating in your first trade, it's normal. Just shake it off and keep at it. Okay, as long as you apply what we are teaching you in our YouTube series, as well as our coaching program, our 12 weeks program, which I'll talk about later on, you'll be able to get rid of the fear. So one of the things you're going to have to kill is the fear. You'll need to kill your attachment to money, because I usually find that when you're attached to money, when your relationship with money is a bit skewed, or it's not very good or very positive, you tend to be very fearful. So, and you also tend to be very greedy. Okay. So for me, mine was greed. And then eventually when I started losing because I was being too greedy, I was taking too big positions in the market, trying to grow $100 account to $1,000 account overnight, which does happen for some experienced traders. But for me, it was just getting out of the gate. Like I said, brand new. I've just learned all this information about trading, and now I want to become a millionaire overnight. I was losing money faster than I was trading. Okay. So these are the two things you're going to have to deal with. And you're going to have to know right now that you're going to deal with them. Okay. And be conscious about it, so that you don't find yourself in a situation whereby you're just losing and losing and losing. Okay. So basically, your psychology is going to be about you focusing on dealing with these two issues. 90%, if not 100% of traders will tell you they've gone through that. Now, something else you need to understand is bias. Okay. Again, part of your psychology. You're going to find yourself having a specific bias, which is basically a predetermined disposition of one position over another. So you'll be looking at the charts, you'll be analyzing, doing your technical analysis, maybe even doing your fundamental analysis, reading news items on various currencies or instruments, and you're going to be using that information to develop a bias. Okay. Now, the thing about having a bias as a trader on a personal perspective, without maybe looking at the technicals and combining that to the fundamentals, is that it can hinder proper decision making when you're trading, and it can prevent you from having a proper judgment. So usually bias comes in whereby you look at the charts and you're thinking, basically, this is how the market is going. Then when it starts going in the opposite direction, you don't change your bias. You're still thinking, like, for example, if let's say GBP, JPY, pound against the yen, you're buying the currency, or you anticipated it was going to go up in value. So you put a buy position, and then suddenly something happens. Maybe you didn't, maybe you overlooked some things in your analysis, and the trade begins to reverse on you. Sometimes your bias will either get you out of the market or keep you in the market. And if you're very biased about what you think is the right thing, it will hinder you when you. So please eliminate your personal bias. Don't have an opinion about the market as a person, like how you feel, what you like. What is important is what the charts are telling you. Okay, for example, what you've been learning. Is market structure looking bullish or bearish? It has nothing to do about what you think and how you feel. Okay, so if you have too much of a bias, it's going to really mess you up as a trader. So those are kind of things you need to think about. Now, the types of bias, really, I'll categorize them as these. Yeah, these are the kinds of bias that exist. There's the negativity bias, and this is the one that makes a trader more inclined to the negative side of a trade instead of considering both the positive and negative sides of a trade. Such a bias can cause a trader to forego an entire strategy because of the negative aspect, when they only need to make a small adjustment to the strategy to turn the trade into a profit. So let's say you've gotten into a trade and it's going in the opposite direction. Instead of you getting out of that negative space in terms of mentally, you start panicking. Again, fear comes in because you're thinking, oh my God, this trade is going in the opposite direction. So you're stuck on the negative side of it, and you're not looking at solutions. You're not trying to say, okay, fine, what's really happening? Is this a reversal happening in the market, or is the trend of the market totally changing? Should I jump out, so that I can shorten the loss and maybe take in a new position? So when you have a negative bias, and also when you're probably not in a very good mood as well, mentally and emotionally, I would suggest don't trade. Okay, if you wake up, I usually have an accountability partner, and sometimes when I'm really edgy about something unrelated to trading, or I've had a really rough day, again unrelated to trading, or even maybe I take a loss in the market and it messes me up mentally and I'm really maybe upset about it, he'll always tell me, stop trading. Okay, stop trading. Because once you're in that space of negativity and you're frustrated, you're unable to make decisions. Okay, your decision making is just zero. So that's the first one, negativity bias. Okay, you're inclined to look at the negative side of things. Then there's the gambler's fallacy. And that's basically, you're like in a casino and you're not really thinking, you're just trading blindly. Okay. And it's a belief that a particular event is less likely or more likely to occur because of past events. When it's been established, the probability of such events occurring does not depend on the previous events. Okay, in such a case, a trader may assume that because a specific currency has been gaining, the trend will continue. So it's like you're in a casino again, and because you've won, maybe you won the first round of the games, then you win a second and a third. You keep on thinking that you're going to be having your trader's luck. You're going to be having your luck just going on and on. That is gambling. That's not how the market works. Okay, there'll be times you'll be making losses, and there are things that you're going to have to put in place to mitigate that from happening. So again, don't come into this market with a gambler attitude, thinking you'll always win, especially after you've had a couple of winning streaks and thinking, oh yeah, this is just going to continue like this. That doesn't happen. That's gambling. Okay. The other bias is confirmation bias. And this is a tendency to only, and this is almost like the negativity bias, it's a tendency to only pay attention to your information that confirms your bias and ignoring any that contradicts it. So again, limits you from making objective decisions. You're just looking at the information that is confirming your bias in the market. You're thinking this market looks bullish because of A, B, C, D. But then you see something else that maybe is pointing in the opposite direction. But because you're so convinced about the way you're looking at the market and the positive elements of it, you're now not seeing the negative, which is contradicting. And this can force you to lose or cause you to lose rather. Okay, so confirmation bias. And then we have status quo. It occurs when a trader assumes that old trades or strategies will continue being relevant in the current market. Or the danger of such an assumption is that the trader does not explore new opportunities that are relevant in the current market, and it can potentially lock them out of more viable trades and strategies. I guess I would put this in the sense like maybe you like taking buy trades, okay? You like taking buy trades. Sorry guys, where I am, it's really raining. So if you hear any background noise, just know that's the rain. Yeah, so you like taking buy trades, and you find that as a trader, you'll either find yourself more or less buying the market more than you sell the market, or selling the market more than you buy the market. It happens. I guess it's also explained by your brain, the way, some of us are left-brained and others are right-brained. So it's kind of the same concept whereby a lot of people, some people will prefer to buy the market. So they'll always be looking for buy opportunities, and others will be looking for sell opportunities because they're always, they feel comfortable selling the market. Like I have a friend who tells me an instrument like the indices like US 30, NASDAQ, she's all and gold, she always wants to buy. And I guess she's looking at it from a perspective of the overall market. Like if you look at gold since the 90s, I believe gold has been going up in value, okay? If you look at the charts, you'll notice that. So based on that, which is correct and accurate, for her, she prefers to just buy because she knows anyway, this thing is going to go up. It's like also the S&P 500. Out of all the indices, Dow Jones, NASDAQ, it's one of the ones that outperforms all the other indices or indexes. And so people who are investors, have an investment mindset, will be wanting to buy it. But that doesn't mean that you can't sell the market, okay? You can actually sell a market in a bullish buyer's market, okay? Or you can buy the market in a bearish market, okay? So these biases are very important to notice, okay? So that you don't get fixed on one way of doing things, and you're always able to see different opportunities. Because if you're only looking for sell opportunities, you're going to be missing out on buy opportunities, and vice versa, okay? So those are the different types of biases, the status quo confirmation bias, negativity bias, and the gambler's fallacy. So we're not going to be gambling, we're not going to be negative, and so on and so forth, right? So how can you improve your trading psychology? Number one, know your personality. Now, guys, at a very individual level, we are all different. Our makeup is different. Our backgrounds are different. The way we think about things is different. Some of us are introverted, some of us are extroverted, some of us are aggressive by nature, some of us, especially when it comes to finances and investment, some of us are very aggressive in nature, some of us are a bit shy. I'll give you an example. For me, I'm a very aggressive trader. In fact, in my investments that I've done in the past, I'm very aggressive. I'm high risk. I enjoy risk, okay? And maybe that's why I'm also in entrepreneurship. Some people are more conservative and they like security. So you'll find that instead of maybe investing in, let's say, the stock market, or maybe even the stock market is not too bad, maybe investing in even Forex or cryptocurrency, because of how fast the markets move and how risky they are, you prefer to maybe invest in land, buy a plot, maybe even buy a couple of shares of a stable company, and so on and so forth. Okay, so if you know your investment appetite or your risk appetite as an investor, that is actually going to end up translating kind of in your trading. So if you are like me, who's aggressive, and you want, you like the adrenaline, you can look at pairs that actually move fast, like the index markets, like I just mentioned, the Dow Jones, Nasdaq, S&P 500. You can look at trading the metals and things like that. But if you're a more calmer personality and you just don't like mayhem and chaos, you can go for the calmer pairs, like, let's say the Euro USD, which is actually one of the most heavily traded pairs in the market. You can look at the USD JPY. They're a bit calmer. If you trade GBP pairs, they're a bit more aggressive as well, and so on and so forth. So know your personality. If you have an anxious personality, maybe you want to become an intraday trader or a swing trader or position trader. If you're aggressive like me, you can scalp, because scalping is really fast. You have to be, looking at your chart. So know your personality, okay, and know it early enough, even before you start trading, especially live. Demo is when you begin to learn. How does it make you feel? Do you get depressed when you lose money in the markets? Do you get overly excited? So you need to know so that you can temper some of those emotions, because the way you want to trade as a trader is without emotion. Eliminate all emotion, okay? You have to be mechanical about how you're going to be approaching the markets. If there's anything you forget about what I'm talking about in this video, is that remove all your emotions from the market, okay, when you start trading live, and just stick to being mechanical about it, okay? Just be like an engineer or a doctor, like 1 + 1 is 2. Don't try to involve how you feel and things like that, okay? So identify your negative traits and identify your positive traits, okay? And then use those to make calculated moves in the market. Secondly, create a trading plan. The only way you're going to be really, really mechanical about your trading is if you're able to have a trading plan. And I'm going to cover this in detail in my advanced class. Okay, that will be one of the initial class topics I'll be covering in the advanced class. But if you have a trading plan, which is going to serve as a blueprint to your trading, it should highlight your goals, okay, that you want to achieve. It would, how much money do you want to make? How do you want to trade? Do you want to be an intraday trader or a swing trader or a scalper? Okay, what is the risk to reward? Like, how much risk do you want to make? How much do you want to take rather? What can you afford to lose? These are some of the things you're going to be discussing with yourself way before you go live, okay? And what strategy? I've already talked about swing trading, intraday, and so on. And what sessions will you be trading in London, New York, Asia, depending on where you are in the world, okay? So that's the second thing to help to improve your psychology, because if you have a plan and you know your personality, then you're going to use that information to help you to trade wisely, okay? And to trade with the right mindset. And then something else, do your research. And I think this is the last thing, do your research. Devote enough time researching and reviewing the opportunities, okay, in the market. If you're going to be using news as, something to add on to your technical analysis, be on top of the news. Know what news is coming out in the market. Start getting an interest in that. Study the charts. Study the charts. I'll tell you for sure, for me, what gained my confidence to the point of, or helped me gain confidence to the point I was like, you know what, I can actually teach people how to trade and be confident that they can be able to make money after my classes, is because I was consistently studying the charts. Like every single day, I'm in the charts for 1 hour to 2 hours, and I'm just looking and I'm just studying and I'm just learning and I'm just, So if you're going to go down this journey, guys, before you embark on trading a live account, make that decision that this is something that you really, really want to do long term. Make that decision now, okay? And that will involve you researching and making the commitment to always be studying the market, okay? This is where I end and I say, in this industry, and I guess in any other industry, or when you're trying to build any kind of skill set, we have this mantra that we say we are always a student. And I can tell you that for sure. For me, I'm always a student. I could be teaching you guys the best of the best, but I know that every time I'm learning something, every time I'm teaching you guys, I'm learning something. Every time I'm staring at the charts, I'm learning something new. I'm tweaking my strategy. I'm improving. you know. So that gives you that edge, that gives you the confidence, that works on your psychology. Okay, guys. So that is basically the end of module 12, part 1. See you in module 12, part 2. Thank you, guys. Bye-bye.